Alright, hello and welcome to Camel Finance. I'm your boy Camel, and as of yesterday, US jobs data came in above forecast. So, bad news, right? Well, not really, because in this environment, bad news is good news is good news, all news is good news, because we're in that Goldilocks zone, and it doesn't make sense, and we already know this by now, so I'm going to move on. So, the joblessness going up has been interpreted by the market as bullish, because that gives even more credence to seeing a Fed pause next week at the FOMC. The Fed will be under even more pressure to move to a pause as the unemployment is going up. So we're seeing this kind of reflected here, 3/4 to a quarter, as you can see. That means if we do indeed get a pause, there is some scope for the repricing that is on this side to move to the bullish side. And of course, the inverse is true as well. If we do indeed see a 25 basis point hike, that's currently not priced in, and we will probably get a significant correction in the meantime. So I was tagged in this. I thought I'd just quickly go over this. Have you noticed that everything happens on June the 13th? It's an inflection point. Why does everything happen on that day? Well, if you know, you know, right? 6/13, that's all I'm going to say. It's beyond crazy. CPI data is on the Tuesday next week, as we know. Then we've got FOMC on Wednesday. We've got this congressional hearing on the future of digital assets. The SEC responding to Coinbase. We've got Binance pausing fiat withdrawals. They are allegedly going to release the Hinman emails, which I'm not sure if we're going to see, to be honest. I wouldn't be surprised if they don't show up because they've already refused them 6 times. We also kind of already know what's in the Hinman emails, so I'm not really sure what the big deal about that is anyway. But a lot of people think that something big is about to happen, especially with crypto, and the SEC Ripple case might be the key trigger. So maybe not. Who knows, right? I personally don't think we're going to see the Hinman emails, and the reason I say that is because, like I said, we already kind of know what's in them, right? You have on one side JP Morgan and Ethereum, and on the other side you've got Bank of America and Ripple. And the Hinman emails are just going to show that these banks are incestually interconnected with both of these. And this is like a battle. It's JP Morgan wants to build CBDCs on the Ethereum blockchain. So what you're going to see, what's in the Hinman emails, is likely just that the SEC and the US government have attempted to slow down Ripple to buy JP Morgan and the JP Morgan coin, aka Ethereum, enough time to merge from proof of work to proof of stake, which is now complete, and thus mission complete, right? They've given themselves enough time to catch up with Ripple, where Ripple was at the time. So that's all that's in the Hinman emails. I don't really think it's a big deal. Like if you do enough research, you can come to these same conclusions, right? Like if you didn't know that, then you just don't know what you hold. If you are an Ethereum bull and this is all sounding surprising, then go and do some research, because again, you don't know what you hold either. I've been very open in disrespecting Ethereum pretty much the whole way through this channel, and it's not because I'm a Bitcoin maxi. In fact, I think I'm quite open to most things. You know, you often hear me say hold gold and silver as well. You see me trade stocks. Like this is not like a Bitcoin maxi perspective, but if you do the research, if you put in the work, then what you'll find is this is JP Morgan coin and Ethereum on one side gunning for CBDCs, and on the other side you have Bank of America and Ripple also gunning for CBDCs. So Bitcoin, silver and gold are the exit, and you can say, wow, yeah, I want to be part of that system, I'm going to hold Ethereum and XRP as well. You do you, it has nothing to do with me, but I don't really see any of this as a big deal. Now I could be wrong, and of course things can pump for no real reason. So we could get a release of a Hinman email and we could see a big pump in XRP, or we could get a settlement and see a big pump in XRP. And I'm currently long XRP for these exact reasons, but I also would not be surprised, and I guess this is my point, if not really much happens coming out of June 13th. Will there be some volatility in wicks? Most probably, but do I see this as something that's going to be a game-changing date? No, not really. And the reason for that is simple. As I say over and over and over again on this channel, 60-day cycles work for Bitcoin. And we're a long way away from that. Now, we could, of course, break out and then drop down into that 60-day cycle low, but this is how I see it. This is what I think is playing out. And if we go into the S&P 500, which also very, very cleanly obeys stock market cycles, as you can see, this time in 40 days roughly, then around the same time, which is at the end of this month to say the first or second week of next month, we're due a cycle low then. So do we get some kind of quick spike up and then that drop down into that cycle low? That makes the most sense. That's what the cycles are telling us. So I don't really think we're going to have like an earth-shattering experience coming out of June 13th. But that is, of course, to be determined. I've been continuing to see a whole heap of FUD going on. And have you seen there's new rules in the UK come into effect in October that require new investors to wait a full day before they can complete a Bitcoin transaction? Well, This is not true at all. No one could stop you completing a Bitcoin transaction, like as if the government could just get in the middle of your transaction. That's not how it works. It's a peer-to-peer distributed, decentralized network. Anyway, when you click into here, what you'll see is it really comes down to mandating advertising companies to have a 24-hour cooling off period. And that's essentially all it is. There's a whole heap of words here. And once you get past here, you know, refer a friend adverts will be banned. Okay, fine. It doesn't affect NFTs. Okay, fine. And then from here down, it just doesn't tell you anything at all of value. It just says things like, oh, cryptocurrency is gambling and you should be prepared to lose all of your money if you invest in crypto. So all of this, I mean, it's FUD, right? They don't even have a good angle here. This is just, it's just a feeble attempt to spread more FUD. Speaking of comedy style FUD, look at this. Now might be a good time to consider quitting crypto. That's exactly what they want you to do. Of course it is. They do not want you to be self-sovereign. They want you to be a slave to the CBDC system. But ultimately, the market has this uncanny way of wearing you down and making you give up before the ultimate move is unveiled. And that is exactly what we're seeing. And if I hop back into this chart, you know, everyone is wrong in a 60-day consolidation cycle. Every time we bounce off of support and start to rally, the bulls champion bullish narrative. They say, ha ha, told you so, we're bullish. And then we swiftly reverse and the bears come out and declare victory. And then we go bullish again and the bulls declare victory. And then we go bearish again and the bears declare victory. But ultimately, everyone is wrong because we're just going sideways. Up, down, up, down, up, down, up, down. But we're still sideways, right? So this is how you wear people out. This is how you make everyone think they're wrong. Bulls, they're wrong. Bulls, they're wrong. Bulls, they're wrong. And the same for the bears, right? So this is all that's happening right now. We're being worn out. They're trying to get you to quit. They're telling you that now is probably the time to quit crypto and you're going to have to wait 24 hours. And none of it's true, right? None of it's true. None of it matters. Bitcoin doesn't care. And here's the truth. If you are still here after the FTX collapse, Luna, a 77% market drawdown from the top, all of this FUD that's going on, all of this SEC nonsense, the odds you're going to make it is very, very high. And this is not a motivational post. This is simply the truth. During 2021, those that were slaughtered were the uneducated people, the short-term travelers, not multi-year grinders and passionate people, not people that understand what they hold. If you understand what you hold, if you're here with anything more than a get-rich-quick scheme mindset, then you're going to do well. If you keep studying and improving your techniques, you're going to continue to do well in this space. And if you have made it through all of this, then congratulate yourself on the solid commitment. Congratulate yourself on being part of a freedom movement. Being here right now is not for everyone. It's not for everyone. And so if you're here now, congratulate yourself for getting Bitcoin at the price you deserve. Everyone gets Bitcoin at the price they deserve. Almost everyone is possibly wrong this market cycle. The consensus of the bears is that the big economic meltdown is due any minute now, versus the bulls that think we're going to get into 2024, undergo a halving, and then do a big bull run, just repeat the past. And that is, of course, a possibility that is certainly on the table, but they think there's loads of time to buy and accumulate and wait until you get rich. But there's this small group of alternate people, like myself, like Miles here, that see a small window before the tightening catches up and we undergo a real recession. All-time high before the halving, and I've been showing this over and over and over again. We will get to find out soon enough. We will find out soon enough if we are indeed going to go full bore bullish, full bore melt up. This is how you attract the most amount of market participants. We know from past market cycles that stocks tend to bottom well ahead of earnings, which by definition means the first few quarters of the new bull market tend to be driven by multiple expansion. And that's exactly what we've got today. And as I often say, this is an entirely liquidity driven market. This is an entire liquidity driven story. So why is there so much liquidity out there? The Fed has promised us quantitative tightening, removing liquidity from the market, but instead they are performing quantitative easing. Quantitative easing, remember, is creating money out of thin air and using it to prop markets up. But they don't want you to know that they just create money out of thin air. They never come out and tell you it's QE. It's always got a slightly different name. This time around, they're calling it the BTFP, right? So all this is instead of printing money and buying assets directly, they print money and they give it to banks in the form of a loan, and then the banks have to go and buy assets. Why? Because the bank's getting charged 5% a year for the loan. So they have to go and chase yield. They have to put that liquidity, that loaned money somewhere. And the result is we get a net liquidity increase. Hence, the market rips higher. You can see here, the Fed balance sheet starting to expand again. It's starting to expand again. Everyone thought that they're pulling liquidity from the market. The story has been that the Treasury is going to be fixing its general account and therefore withdrawing more liquidity from the market. And whilst that acts as one factor in this massive push-pull battle, we are still seeing liquidity increase. And here is that QE that's not QE. Instead, it's the Bank Term Funding Program. It surged $100 billion, reaching a new high. There is still plenty of liquidity in the system. If there wasn't, we wouldn't see the charts ripping higher as they have been. So tell me you're capitulating without saying you're capitulating. Asset managers are piling in now after fading strength for months. If you've been on this channel for a while, you will have heard me say, it is not the job of asset managers and hedge funds to pick the bottom. That's not what they do. They are trend followers. They do not call tops and they do not call bottoms. So all they do is they remain short during a downtrend. They wait for a new uptrend to be established, which at this point in time is now undeniable. We have months, all the way since October, we have been making higher highs and higher lows. We have broken out of downtrends. We have flipped MAs to the bull side. The MAs are stacked on top of each other with the shorter MAs above the longer MAs, and we have been trending up ever since. This is now a fully established uptrend, and we are seeing the asset managers move in. It's now undeniable that a trend has established, and they are now going to continue to chase this rally higher. This is how the game is played, remember. So as always, I will come back over the weekend. I will do a deep dive. I will show you all of my positions, how I plan to handle next week. I'll show you all my live positions, win, lose or draw, and I'll call out new ones ahead of time as I always do and give them away for free. For now, I'll quickly skim over a few for you. Here's Bitcoin, as you can see, still sideways. Unless we break out of this downward sloping blue resistance line, then this is what I expect to happen into that 60-day cycle low, and then I think it's go time. The dollar, as you can see, needs to make a decision. You could argue break down, moving lower, or you could argue break out of the yellow line, retest, looking for possible resumption. We'll get an answer as of next week. The primary trend is still down, although it is attempting to buck that trend currently. The S&P, as you can see, still in an uptrend. We're still pushing this long, and we will continue to push until we have reason not to. The Nasdaq still ruining the dreams of every bear out there. Good luck trying to short this. This is way too powerful to try and short. If you're going to be bearish, you have to wait for at least a trend line breakdown of the yellow or the red. Notice how the Dow breaking out. I'll get rid of this, right? We've had this first repair. We've had this second repair completed as of yesterday. I think if we can get above these local highs here, we're going to see a face melting rip out of here. It would probably look something like this, bit of consolidation into this box. And then once it breaks out above the top of that box, it's probably going to be a face melting rally. Not quite as vertical as that, but you get the idea, right? I think it's going to do insane things. So I'm looking forward to seeing what can happen from the Dow over the coming weeks. The VIX continues to bleed, doesn't it? So some level of counter trend bounce is reasonable to be expected, especially as we get towards the end of the month into that cycle low for the S&P. But then I believe it's time to really put an end to the volatility index. Before then, we can think about buying trendline breaks and looking for massive volatility upside. Here's Apple. So as you can see, every time we pull back, it feels nasty, right? Every time we pull back, but this is why we use trend lines. Trend lines give you an area on the chart to manage your risk around. So far, we're holding the trend line. We're having a slow cakewalk up to the all-time high, which is denoted by this green horizontal. Get above there and fireworks can start. Now, will they, won't they? That is anybody's guess. But as it stands, I continue to push this long all the time. We're above the blue and the yellow support line. Here's Tesla. This was called out in the members only section of the YouTube channel. So Tesla looks like it's going to do a big gap up today. You can see that was a great call out. We called this out here on Friday. It broke out on the Monday. And since then, we are enjoying the gains. Here's gold. So gold, possible breakdown, possibly going to be working on this breakdown of this upward sloping blue support line. We'll see what can happen here. Now, I kind of expect the dollar to roll over. So if that's the case, isn't that going to fuel upside from gold? Quite possibly. But lose this upward sloping blue support line, as I've been talking about, and we will be getting short. So not currently short, looking to get short, something like this, or stop about here maybe. And we'll see how low it can go down. And then, as I've been saying, get down this low and we can cover the short, flip long on a trend line break. And I believe that will be the final blast off move for gold. So one day at a time as ever. So far, everything looks so good as far as I can tell. Like I said, I'll be back over the weekend to do a full deep dive, examine the closes, ready for next week. Next week, of course, is FOMC. It's going to be a volatile week, as FOMCs always are. We're going to see CPI probably come down. So there's going to be lots of things going on. The market's going to need a bit of time for the dust to settle. But as always, it will settle. Then in the end of the month, we'll be able to find the cycle lows, add full exposure, go to maximum aggression within a reasonable and professional risk tolerance, and look to ride the final portion of this blow off top melt up. So if you made it this far, comment waffles down below. And in the meantime, I'm your boy Camel. Enjoy your weekend. Take care from me. All the best. Cheers. Bye.